There's Adams Musa. Have you seen that one?
It is called
Adam Musa.
2019.
Yes, May 2019.
Oh, May. Yeah, yes.
Let me roll my board. So the questions reads, Adam Musa operates a manufacturing business trading as AM Manufacturing Enterprise. The following trial balance related to this business as at 1st September 2018, right?
Yeah.
We have factory building, plant and machinery, land at cost, motor vehicle at cost, provision for depreciation in bracket 1st January 2018. There is asset. We have sales, purchase of raw material, factory wages, office salaries, distribution cost, factory rates and insurance, provision for unrealized profit on 1st January 2018, and carriage on raw material, bank balance, trade receivable and trade payables, royalties paid, allowance for doubtful debts, that is 1st January 2018, and office and insurance. We have factory field, inventory as at 1st January 2018. We have raw material, work in progress, and finished goods. Factory managers' salaries, capital. So those was where there is now a lot of work is additional information, because this is what make you not to balance the financial statement. It's all about the additional information. Note number 1. They said during the year, Adam Musa had taken a raw material valued 2.5 from his store for private use. So what is that statement, or what come into your mind? Because it is good you analyze each statement or additional information. Once you know the treatment of that information now, so they take that raw material of that good. So what we know is what? Note number 1, we said they take that raw material. That one we will treat as a what? A drawings, right? Yes, but
so where are we?
That note number 1. That is additional note number 1.
Yes.
Yes, they say during the year, Adams had taken a raw material valued at 2.5 from his store for private use. So that is drawing, and we know there is 2 treatments of drawings. There's a drawing in the that is a dating account. If it is manufacturing, you have to recognize it. If it is for goods and raw material, you have to remove it from the from manufacturing account or income statement. Then again, you have to remove it from the balance sheet, right? But if it is a pure drawings, you don't recognize anywhere in the income statements. So you just only recognize under balance sheet. Then we go to note number 2.
So for our case,
yes.
For our case, it's saying it had taken raw material of 2.5.
Yes.
So that one will affect manufacturing account, huh?
That one will affect manufacturing account and balance sheet. So there's 2 effects, because in accounting you must satisfy the double entry rule. There's you debit that manufacturing, you credit what? Equity.
Okay.
Then there's a note number 2. Manufactured goods are transferred to the warehouse at a cost plus of 25% of the factory. That means they give us the question we did last class, they had given us the value, right? I see you see. So this manufacturer, the last question we were finding out this profit, but now they have given us the percentage. So we will use the percentage to get what? The manufacturing profit or loss or loss.
Loss.
Number 3, allowance for doubtful debt. Allowance for doubtful debt is to be maintained at 5% of the trade receivable as at the year end. This is a chorus question. You only take that 5% of the trade receivable. You check if there is an increase or a decrease, and you know that one. That one, yes, it will go to income statement. Note number 4. Sorry. Inventory as at that 1st September 2018 was valued at that one. We have raw materials, work in progress, finished goods. Don't have a problem with that. Note number 5. Accrued rates as at that 1st September 2018 was as follows: factory and office. Note 6. Prepaid insurance, that one. And note number 7. Depreciation is to be provided for as follows. We have for factory building, motor vehicle, plant and machinery. Note number 8. Provision for unrealized profit as at the end of the year should be what?
800,000.
Yes. So these are good questions. It has a lot of what concept. Generally, the concept you need to know under manufacturing. So you need to start writing the headings. So we will start with, let's use, they have told us AM manufacturing. Manufacturing enterprise. This is manufacturing account. The year ended. That was December 2018. So we say manufacturing, we start with what? Direct what?
Direct cost. Direct cost.
Yes. And under direct cost, we say we start with opening what?
Opening stock of raw material.
Yes, opening stock of raw material. In our case, it is how much? Opening stock of raw material. Under trial balance, you check it under trial balance.
Okay. So
you see, they normally they normally say inventory comprise of. So say inventory on 1st January 2018, we have raw material, work in progress, and finished good. Have you seen? Second to the last note.
Yeah.
Yes. So it is 2,000. After factory fuel.
Let me see. After
factory fuel.
Yes, factory fuel, yes. Inventory. Oh yeah, yes.
Yes, that is the stock. Then we add purchase of what?
Purchases of raw material.
Purchase of raw material. It is in a trial balance again. After sales, we have the purchase of raw material. How much? 60,000.
1,000, yes.
And what else do we add?
Add carriage inwards of raw material.
There is a carriage inward of raw material.
Not from the format, but here we have carriage.
Yes, so there's a carriage on raw material. We have not been told that it is carriage inward or carriage outward.
Out.
But depending on the format they have given us, that is carriage outward, they are what? They have debited that amount, right?
Yes.
So we add. So it is carriage, when we add, it is carriage what?
In carriage inward.
Inward, yes. So we add carriage on raw material. Tumepewa ya ngapi? We have been given 600, right?
Yes.
100. I don't think there's another thing, so we add so that we get the cost, or there is any other information which will affect that one, direct cost.
Maybe return outwards if at all there is.
There is no, yes, but so if you sum that one, how much are we getting? 2,000 plus 60,000 plus 600. We are getting 62.
62.
62 600. I think I should put somewhere here 62 600. No, should put here 62 600. Na tulisema hii itakuwa nini? Cost available,
For use.
cost of raw material available for sale, right?
Yeah.
Then we less closing stock of raw material.
Raw material.
Raw material. We have closing stock of raw material under additional information to note number 4. Inventory as at that 1st December 2018 was valued as follows. That is that 500. So we less that one down.
Yes.
If you let that one, you will get a value here that is a cost of raw material consumed. Cost of raw material.
Just a minute, let me copy some few things.
Yes.
Let me copy this sample, then I continue.
You are lost.
I'm just copying this.
Oh.
Yes.
Are you through?
Yes.
Okay. So when we less that one, 200 we less that 500, we are getting 51.
100.
51 100. So we check here 51. Before that one, there is something we should less again. Note number 1, during the year, Adam taken raw material valued from his store. So there's a drawing, right? Yes, so we can cut this one there, cut this one and paste it here, so that we less drawing again here. Drawings of raw material. For how much? 25? 500. So that we get our total. That is, when you less that one, now we get 56, 600.
600.
Yes. So we are through with direct cost. Now we can go to, after direct cost, tunaenda
Direct expense.
direct expenses. So in our case, I see only one direct expense, that is royalties paid. If there is a direct factory expenses, they will give you the information. Like this one, we have royalties paid, that is a direct expense. So we have royalties. Have you seen the royalties? Royalties under trial balance after trade receivable and trade payables. Yes. You lost. So there's a royalties of 800. So I don't think we don't have any direct expense. What? So after direct expense, the total will give us what? A prime cost. The total will give us the prime cost. So I will add that one to 600 plus 800. How much? We are getting 74,400. 57,400. That is the prime cost. Then I go to, after that prime cost, I go to indirect expenses. I hope your sound is your sound working? Or I'm talking alone?
I know, we are together.
So indirect expense, we only capture anything relating to manufacturing, not everything else. That is expense. So let's start with the notes. Additional information, number 1 we have dealt with. Number 2 is not yet. Number 3, that is for income statement. Number 4 we have dealt with. That's not number 3. Accrued rates as at 31st September December 2018. So we have the factory, that is what? Factory rate and insurance. So we have factory rates and insurance. Okay, so they have given us accrued. So we said accrued to add back. So we will check what they have paid. That is 800 balance. We add the accrued one, which is 600. Seeing there is a note 6, that is prepaid insurance. They have combined. So we have to less that prepayment of how much? 300. To give us how much?
The total factory.
What they have paid in the trial balance, they have paid 800, right?
The factory rate and yes,
Yes,
the 800. Yeah.
that's what they are paid. Then there is a accrued, that is not number 3. For rates, that is 600. So we added back that one, that's 600.
That is 800.
Yes, that we
The
less.
factory accrued of 600.
So you then you less the prepaid for insurance because it is a combined of what 300.
There's also the trial balance.
Yes, in trial balance. No, so you see in trial balance they have paid 8,800.
800, yes.
That is factory rate. Don't include anything about office. And then when you come to the note number 3, they said accrued rates we have for factory is 600. So we add back that one. And then note number 6, prepaid insurance, because intrabalance, factory and insurance are the combined value. So when you do that now, how much are you getting?
Factory rate plus insurance. 14 minus 300, that is 11.
So these are free marks. Make sure anything relating to accruals, prepayments, allowance, or doubtful debt, that one is a free marks for you. Because it won't change. It normally, even if they come in which format, adding and subtracting will not change. Then, what else do we have? Note number 7, depreciation. So we go to depreciation. We want to finish first with the additional information.
Okay.
Depreciation. So we have factory building. Factory building, they have said it is 2.5%. That is 2.5%. We check the cost. The cost of factory building is 4,000. The first note, under balance, that is 4,000. To give us how much? That is 2.2% of 4,000. 2.2%, 4,000. That is 100, right? Say depreciation, they said factory building, that is 2.5 on cost. Tukuna cost ya how much? 4,000. Factory building at cost, that is 4,000. Iko kwa trial balance. No.
Yes.
Okay, so to give us 100, that is depreciation. So what else do we include for depreciation for manufacturing? Tulisema tuna include nini tena?
Manufacturing.
Yes. Or what goes to manufacturing? The other question, we consider 2 depreciation. That is, but the first one here they have specified, that is factory building. What other assets? No. So the question you ask yourself, is motor vehicle being used in manufacturing? You might not know, it might be used in manufacturing and office as well, right?
Yes.
So that what we are not sure of. What about plant and machinery?
Plant and machinery.
So if it is a manufacturing company, obviously we know there is a plant and machinery which are used to manufacture product, right?
Yes.
So we will charge depreciation to that manufacturing account. We will not recognize it under income statement. We will recognize on manufacturing account. I thought we did that one last time. Yes, so go back to the question and just go through it. It said plant and machinery. Because examiner will not tell you depreciation for plant and machinery will go for manufacturing, but you have to use your reasoning what? We call it IQ. Yes. So you take that 10% times the cost of plant and machinery is how much? 8,000. Up, it is under trial balance, the second asset after factory
Yes.
building, yes, to give us 800. 10% of 8,000 is 800. I think we have exhausted the additional information. We go back to,
So kindly,
yes.
before we continue, so we are not going to use the motor vehicle. We shall not going to
No,
depreciate.
those motor vehicle, we are not sure. If it was they specified the motor vehicle, it was used on manufacturing, we could have recognized it. But if they have not specified, you assume it goes to the normal income statement.
Okay.
Yes.
Oh, this one is very strange.
Then, so let's now go to additional balance. We see other expenses.
And what about land? Land is open.
Land is not. We don't depreciate land. We value it.
Oh, we appreciate. Sure.
Yes.
Oh, that's yeah.
But if they say the land appreciate, you could have recognized it. I think it is under office. That one is under office.
Okay.
So the first expenses, we have factory wages under trial balance. Factory wages, we have factory wages that is 1,200.
Factory wages.
Yes, factory wages.
Factory fuel.
You see, so we have done it with the additional information.
Oh, yeah. Okay.
So once you have done it with additional information, while picking other expenses, you start from the starting point in the trial balance. As you go down to see what are the expenses, so that you don't left other expenses, right?
Okay.
So like for me, I have started factory building, that is not expense, plant and machinery at cost, that is not expense, land, it is not expense, provision for depreciation, those are accumulated, sales, purchase of raw material. The next one is factory wages. That's why I've recorded factory wages, right? I go to the next one, office salary. That one goes for income statement. Distribution cost. That one is for income statement. Factory rates and insurance, we have dealt with. Provision for unrealized profit, that is income statement. Carriage on raw material, we have done with that. Bank balance, those are assets. Royalties, we have done. Allowance for that full debt, that one is income statement. Office rate and insurance, that is income statement. Factory fuel. Because we are only looking
So
for
here we are recording related to factories, isn't it?
yes, expenses related to the factory only. So you record that 1,200. So is there any expenses relating to this one?
Factory manager's salary. I think this one was supposed to be the direct expense. There is this factory manager's salary.
Factory?
Manager's salary.
Oh, no. If they have not told you that this is a direct, you don't include as a direct. So it is indirect expenses. Factory managers.
So how will you know that it is an indirect and not direct cost?
If it is a royalties, you know that one is a direct. But if other these expenses like wages, fuel, if they have not indicated direct factory wages, that one is not, that is indirect. So the examiner will specify direct factory wages or direct fuel, EVO. If they have not specified, just put them as indirect expenses. That is 18.
Okay.
18,000. Not 18,000.
It is
650.
650.
Yes. So examiner will specify the indirect and direct cost. So we sum it. Now 1100 plus 100 plus 800 plus 12,000 plus 1200 plus 650. That one is what? How much are we getting? Me, I'm getting 15,850. Is it the same with my value? So sum it, we compare the values.